Taco Bell may not be the first place you think of when wanting an iced latte.
We're right back, guys.
But the chain wants to be. The Mexican-inspired fast food company has begun remodeling some locations to add what they're calling Live Más Cafés, capitalizing on the explosion of popularity for dirty sodas and specialty coffees.
I just personally love making the chillers. I think that they're fun. I'm such a milkshake person, and so it's like a fun twist on that.
Today, we're not known to be a beverage destination yet. But we know, just like every other category we've entered, that when we put a unique Taco Bell spin on anything, our fans and consumers and culture really respond. We think that by 2030, beverages should be a $5 billion business layer for Taco Bell.
More young people and Gen Z consumers are looking for cold, customizable drinks. That younger consumer is a really key demo that restaurant companies want to find and bring into the fold at a young age and hopefully have them grow up with the brand.
But the restaurant industry is competitive, and over the past 5 years, Taco Bell has lost some market share amongst Mexican quick-service restaurants. CNBC visited Irvine, California to get a first look at how the company is betting on drinks to win over consumers. Taco Bell opened its first Live Más Cafe in Chula Vista, California at the end of 2024 as a test concept. The store did 4 times the initial sales forecast, according to the company. Since then, a few more have sprouted up, like this one right here in Irvine, California, which opened mid-September. Taco Bell says it's already selling over 900 beverages per day, and a third of the orders include a drink from its specialty menu.
These are going to be customizable drinks that you can really only get at a Taco Bell that feel like a unique experience, something that's worth going out and spending your money on. But beverages are going to be a key part of Taco Bell sales moving ahead.
Taco Bell says it's already sold 600 million beverages in 2025, up 16% from 2024.
The Live Más Cafe has the potential to do a couple of things. One is a business driver itself, putting Live Más Cafes, our shop-and-shop format, into as much of our estate in the US and around the world, we think can be a really positive same-store sales growth, profit, and transaction driver. But the other interesting thing about Live Más Cafe is we can pull some of the innovation from the menu and things that we're learning and scale it to all the restaurants.
The company's already doing that. I'm at a Taco Bell here in New York City and just ordered these agua refrescas. This is a mango one and this is a dragon fruit one. They're green tea-based drinks with freeze-dried fruit in them. Starbucks has been doing drinks similar to these for years, but it's a new one for Taco Bell. The company said that they created them for Live Más Cafe and they were a top seller there and they rolled them out to stores nationwide.
You know, whether this touches every single restaurant or not, TBD, but what I think is going to touch every restaurant is some of the ideas and the innovation that is actually coming through the pipeline here for Live Más Cafe.
Taco Bell's push into beverages comes at the heels of McDonald's shutting down its standalone drink concept called Cosmics, which launched in December 2023. The rollout was small, with only 5 stores when the concept shut down. The company says it's now using insights from that initiative to test drink rollouts in 500 stores.
The best part about what McDonald's did about it, what investors are looking for, is to use Cosmics as the learning lab to export the best practice of beverages to the 14,000 stores. And McDonald's has taken initial steps here. Taco Bell started in one store in an existing restaurant relative to McDonald's that tried a beverage-specific secondary concept. So it's a little bit different.
Beverages have become a major growth opportunity for the restaurant industry. The number of drinks offered by the top 500 chains has increased by more than 9% in just 1 year. Expanded drink offerings are being seen across the industry, with chains like Sonic, Jollibee, Whataburger, and Wendy's all jumping on the trend.
Just beverages being such high margin, there's a lot of leniency around experimentation with it. I think that Dutch Bros has been the concept that I think all eyes in the industry are on, saying, okay, what's working there and how do we incorporate that into our own practices?
Dutch Bros has been at the forefront of beverage trends. For example, it introduced protein coffee on its menu more than a year before Starbucks did. The coffee shop chain's stock is up around 50% in a 1-year period, though down significantly from its highs in the first quarter of 2025, due to high costs surrounding its aggressive expansion plan, along with some tariff concerns around coffee.
We forecast beverages will be the second fastest growing category within limited service restaurants after chicken. Our optimism on the category is really around the desire for increased caffeine. And so if you look over time, both our survey data and National Coffee Association data would support that caffeine consumption in the United States is growing.
And it's not just coffee. Energy drinks are also exploding in popularity. In August, Dunkin' told CNBC that its refreshers, which are also caffeinated with a green tea extract, saw a 30% increase in sales year on year in its most recent quarter.
At a time when quick service giants like McDonald's and Starbucks are struggling to grow sales, Taco Bell is a standout in the industry.
I think that's like the billion-dollar question is how do you stay on top of culture? I would say there's a couple of things. One, you have to listen all the time. We always talk about everything's a focus group, whether it's reading comments from videos, whether it's talking to your friends. I talk to all the parents at like all my kids' soccer games and dance activities. Like, you have to really be thirsty for cultural insights all the time. I think the second thing is you got to take a lot of risks. You got to take a lot of shots. I mean, we've tried beverages many times in our history, and now we really feel like we're getting it right.
With rollouts ranging from its upscale cantina restaurants to Baja Blast gelatos, experts have long credited innovation as a key driver of its success.
It is a brand that has a high-functioning ops team, that they've doubled the cadence of menu innovation in recent years. They historically participated really in the beef channel. You know, chicken is a relatively new offering for them. Beverages is going to be the next offering. And that's all supported by a marketing-led culture that really just finds new creative ways to really emphasize the brand and put the brand more unique and desirable spaces as well.
Taco Bell has raised prices about 75% since 2019, outpacing major chains like Wendy's, Starbucks, McDonald's, and Burger King. But it's still seen as a good deal. The value perception amongst consumers making less than $50,000, which is a key fast food demographic, is continually higher than its peers.
You're seeing some competitors in the space, namely McDonald's, really double down on value messaging, particularly in this recent summer-fall time period with their extra value meals. They've had to do a lot of work on messaging and getting the low-income consumer to understand what's available at McDonald's restaurants, because there were headlines over the course of the last year about an $18 Big Mac. And that, again, was at one location, but it went viral, and it's the kind of thing that sticks with consumers.
Despite its innovative offerings and strong value scores, Taco Bell is losing market share to other major chains in its category. According to a Barclays report that looked at the top 250 restaurant chains in their respective categories, from 2019 to 2024, Taco Bell lost more than 4% of Mexican quick service market share, while Chipotle gained about 8%.
I know we're going to try things that others won't do. And it's really fun for this team because, yes, we sell a lot of beverages, but we haven't been in the specialty beverage category. You know, we really don't have boundaries, right? We don't know what we don't know. So I think we're really going to push the limits.
Taco Bell is a part of the Yum Brands portfolio, which also owns KFC and Pizza Hut. Over the past 10 years, the stock price is up around 200%. But in the short term, it's been more volatile and underperformed the S&P 500. While Taco Bell is a strong, consistent performer, the company's other two brands have weighed heavily on the portfolio, especially Pizza Hut, which has seen 7 consecutive quarters of same-store sales declines.
Taco Bell is a standout and standalone, really, when you think about it as a part of the Yum Brands portfolio. It's had positive same-store sales momentum in recent quarters, in recent years. Yum Brands CEO David Gibbs said that they haven't had a negative week for Taco Bell. I think part of it is the idea that it's just become such a cultural phenomenon, particularly with younger consumers. Millennials and Gen Z absolutely love it. It is able to capitalize on buzzy marketing in a way that other brands are struggling with, quite frankly.
You're seeing as well within the KFC and Pizza Hut segments greater instances of bad debt expense in past years and past quarters, where they're not collecting the full royalties, from their franchise base, just given the economics. And so our admiration of Taco Bell is overshadowed by other challenges within the Yum portfolio.
Though Taco Bell is about 40% of Yum's company revenue, it's only about 25% of total system-wide sales. The Mexican-inspired chain is a disproportionate contributor of profits because Yum franchises less of its stores.
So when a restaurant owns a store, they collect all the sales, they pay all the expenses, they pay the people, they pay for the food, and the The profit contribution is what's left over after that. Taco Bell is about 94% franchised, while KFC and Pizza Hut are both 99 to 100% franchised. And so you have a high volume here, over $2 million of sales per store per year. That far outpaces the average for KFC as well as for Pizza Hut.
The company says it hopes to reach $3 million in average sales per store by 2030, and beverages could be a big part of making that happen. It is targeting a $5 billion drink business overall. By the end of 2025, it says it's on track to open 31 Live Más Cafés. Because the company is mostly franchised, to really scale this initiative, it'll require franchisees to be sold on it.
We really partner very closely with our franchisees to launch things like Live Más Cafe. We had one very, very, very important franchisee to us, the DRG Group, who helped us create this. But we are also the largest operator of Taco Bell restaurants in the US. So our company estate is a little bit over 500 restaurants, which allows us to really learn and grow and push on a lot of the future growth.
The Irvine Taco Bell CNBC visited is a company-owned location. Taco Bell declined to share what the remodel cost. But industry averages show that a small to medium-sized renovation within a quick-service restaurant can cost upwards of $100,000. Plus, when a company's mostly franchised, you need your individual restaurant owners to buy into scale initiatives like the Live Más Cafe.
Given what we're seeing right now from the business results, the payback looks really attractive and in line with what our franchisees would expect for something big, but we got a lot more to learn.